Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I want to talk about fintech stocks that have went down recently this week. We've had a little dip in the market across the board. It's time to get excited about some of these fintech stocks that are out there, especially the big ones that have a strong foundation. I know we have a lot of uncertainty right now, but let's take a look at the deals that are out there. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research, guys, before investing in any stock. And of course, if you like stock analysis like this, then please subscribe to the channel, like the video. Thank you so much for all of your support. It makes a huge difference on the amount of times that these videos get seen. And finally, if you're interested in joining the 40 Finance email list, link in the description. I'll send you my free 15-minute stock analysis guide as soon as you sign up. So check out the description and sign up today. All right, now before we jump into these individual stocks, I think the key here to all of these is you have to have a bullish theory on fintech, the way the distribution of money, the way it changes hands, all those things are changing. Traditional banks are at risk. Those are some of the core philosophies that you probably should have before you even invest in any one of these stocks. But if you believe in those things, then in my opinion, now might be a good time before the holidays, before the presidential election, all those things. Now might be a good time to either average down your existing positions, or of course, could be time to start a new one. Doesn't mean that these stocks won't go down further. I think today we're down 2.5%, something like that. And it's not even lunchtime here in Cincinnati. And 2 days ago, we were down another 2.5%, 3%. So things are falling. Doesn't mean that this is the bottom, but when you choose a good stock that has a lot of promise for the future, doesn't really matter if you hit the exact bottom or not, if you know that the spread between today and the future is healthy enough that you can make money. All right, first stock on the board is my favorite right now, which is PayPal. Shouldn't be a surprise. I have tons of PayPal videos. If you're interested, go back and look at them. I'll try to also put some in the description. Long story short, though, PayPal at 191. You can see 52-week range. It's been as high as $215. That was recently, I want to say, in September. P ratio today is 87.93. You got an EPS of 218, and you have an earnings date. Is that next Monday, November 2nd? I believe that's next Monday. And if that goes anything like the last earnings, then I would expect good news for PayPal shareholders. Looking at the top of the screen, forward PE right now sits at 42.92. And to make a comparison there, the PE last year at the end of September was 49.33, okay? So you've got a forward PE that is less than last year's trailing PE, not to mention your forward PE is coming down about half of today's trailing PE. So there's a lot of value factors in there, right? And at least in my opinion, those value factors are starting to get to a point now where you can buy at 191 and feel pretty good that if you're long-term hold, you're definitely going to make some money likely in the next few months. All right, we always look at the TipRank's dashboard here to see what other analysts think, just to check our crazy level, if you will. And you can see here that PayPal's been updated several times in the past days. This one goes back 22 days. And every analyst is, what is that? Plus 212 all the way up to 290. So you're looking at a 1 year upside right now of plus 22%, probably about on average. And it could go up more from there. Frankly, I think it will go up more from there, and that's because PayPal's had a lot of initiatives lately. Go check out their news feed, see what they've been up to. But it's been a great year for PayPal, and I think it continues well into next year. All right, next up is Mastercard. And know that when we're talking about PayPal, Mastercard, we've got Visa on here as well. Yes, these are fintech companies. They are very aware that the way money is moving is changing, and they're coming up with all kinds of new ways to distribute money. So Mastercard and Visa, yes, they've been around for a little while, but they're right in the heart of fintech, and a lot of that ties into their e-commerce functionality and how they're wiring stuff up with partners and things like that. All right, from an analysis side with Mastercard, we got a price today of $2.90. 52-week high is $3.67. That looks like, again, that was around September, August, something like that. P ratio today of 43.52. EPS at an ominous $6.66. You also get a little bit of a dividend with Mastercard, 0.55% on today's price. They did just have their earnings, and them and Visa are kind of similar in the sense that the lack of travel has affected their payment volume, particularly cross-border payment, which pays pretty well for them. However, despite the lack of travel, particularly cross-border travel, they're down year over year, 5 or 10% on overall volume, but they're still cranking away. You see what's happened to a lot of these other companies when travel went away. That is not the case here, but it's all the more reason to consider this a stock that's on tough times, so to speak, but has a very bright future. And now we're throwing in a stock market dip on top of it. Makes a lot of sense to think about something like Mastercard. All right, you see at the top of the screen, again, forward PE 33.22. PE last year at this time, 41.84. That was at the end of September. So right now, the trailing PE ratio is 43.52. That's only 2 points higher than it was last year before we had all this stock market run up. And you got a forward PE of 33.22. So I feel very confident saying that Mastercard is in a fair valuation point right now, certainly in an atmosphere of zero or low interest rates. All right, let's look at the TipRank side. Buys across the board. Looks like most people are landing in the 350 range, call it 335 to 350. So plenty of room for upside there. Let's say we get to the summer of next year and Mastercard lands at 350. You bought it at 290. So that would mean you'd be up $60 in less than a year on a single share, plus a couple bucks maybe from the dividend over across the quarters. Really good investment because guess what? That's not the end of it. Mastercard's doing good things. They're going to be growing in the future. All right, on the Visa side of the coin, very much the same situation. One thing that's great about Visa, and I'm a big Visa shareholder, is that they actually beat their earnings estimates. Now, travel, cross-border, just like Mastercard, it's a killer this year. And I honestly will be surprised if a lot of that comes back before summer of next year. But it's not like they're not making money, and they're still hitting some of their goals. We'll have to see how the holiday season goes, but I have a feeling it's going to go very well for Visa. That's just a gut feel on my end with e-commerce and everything. Nonetheless, we're at a price today of $183. 52-week range ran up to 217. P ratio today of 34.82. The forward PE drops to 31.25. And guys, last year at this time, the trailing official PE was 33.08. So again, you are in an elevated market with low interest rates, very few other investing opportunities that are going to pay well. You have an option to get in on Visa basically at the same valuation as last year. And this is a company that's staring right in the heels in a year or so of a major bounce back once travel and outdoor activity and all that start to flow. All right, looking at the TipRanks dashboard for Visa, you're everywhere from 216 up to 230. There's even a 250 in there. Most analysts, I'd say, if you kind of average this upside downside column, you're probably landing about plus 20%. But just to reiterate, that's plus 20% for a stock that's profitable in a year that they're hurting. The future's still very bright, and fintech is disrupting across the board. So get 20% on an AKA bad year, then I feel pretty good about that. All right, last one we got today is Square. Square is one, just to be totally transparent, I'm not a big Square person. Out of these 4 stocks, I'm in PayPal and Visa. Those are the ones that I've kind of doubled down on. Doesn't mean that Square is not going to make money though. I would just encourage you with Square to make sure that you're reading up and you understand how the company works. And how that they're making money. None of this is meant to be negative. It's just I don't think everybody understands Square's business. It's completely different than PayPal. It's completely different than Visa. So make sure you read up about that. From a stock perspective, though, we're at 159 today. 52-week range ran as high as 193. The PE ratio today is 248.54. Got an EPS of 64 cents. The forward PE for Square goes from 248 today down to 138. You see it on the top. And last year at this time, they weren't even producing a positive EPS. So Square is rolling into profitability. So for this one, and the reason a lot of people are attracted to it is you're kind of at this beginning point for them, and they're increasing the domain of things that they work on, and that's why there's so much excitement about this one. All right, on the TipRank side of the coin, we've got anywhere from, let's see here, well, there's one guy selling at 120. If we disregard that, though, we're looking at between 195 and 240. So, let's just say it's 35% upside for Square by most analysts. And Square's another one that's having their challenges as well with small business and local merchants seeing down volumes. Now they've made up for it in some ways with the Cash App and things like that. But here's another one that if you think the world returns to normal, let's just say in summer of next year, then Square has a lot of potential and basically free money to get back to where they were, not to mention the growth rate in the future. All right, speaking of growth rate, this is just a quick look at the projected growth rates for all the stocks that we covered here today. You've got, in this one, this is Visa, Mastercard, PayPal, Square. I had to get from a different source. This one's from Argus, Morningstar for Square. Bottom line, you can see Visa, Mastercard, PayPal, 5-year growth rate, 20, 20, and 12. That's a 5-year growth rate, by the way. And EPS growth, 15, 22, 16. And my guess is, quite frankly, that these are underestimates and that it wouldn't surprise me if these 5-year growth rates are closer to the 25% mark, particularly PayPal, who has added some different things with Bitcoin recently that could be huge. Maybe not, we'll have to see. But you're adding top line growth and you're adding EPS growth. Anytime you add EPS growth, okay, you're bringing the PE down. So the PE that you buy today, which we've already seen is discounted, that is going to go down if these guys hit their growth rates as projected. When you're talking about a report like this with Argus, these are real projections that people have put a lot of time into. This isn't just me stepping up and saying, oh, 20% growth rate because I think so. No, these are run through different models, so I feel pretty good about them. And you see down there on the Square end, I had to use Morningstar for them. They don't necessarily have an EPS growth projection, but their revenue growth projection across, 3 and 5 years is plus 40%. So definitely a lot of excitement about their opportunity. I'm sure earnings will fall in line with that. It was probably just hard to project a model with Square because they just only started having like a legit EPS. So it'll take a while for the model to train and figure out, what does 40% top line mean for Square's EPS? All right, guys, so those are my fintech stocks on sale. If you have been waiting for an opportunity to get into fintech, then I would say that this is not a bad time at all, particularly with holiday shopping season coming on. If you're nervous about potentially maybe the market goes down even further, let's say you have 100% of your investment, just go in and spend 10% at a time, 20% at a time, something like that. And that's if you're just determined to get the lowest possible price. But I wouldn't worry too much about the absolute bottom on these. Maybe just chunk in at 20, 25%. look more forward, because that's what these companies have going for them. All right, hope you guys enjoyed this video. Please give me a like and subscribe if you did. We'll see you on the next video.